Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make a little bit of money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. On Wall Street, we've all been conditioned to believe that good news is bad news and vice versa. Maybe if the economy is too strong, we can expect the Federal Reserve will raise interest rates, bad for growth. And if the economy is weak enough, the Fed will cut rates, good for growth and the stock market. But sometimes bad news really is bad news, like the very weak employment numbers we saw this very morning, something that shows the economy is producing far fewer jobs than expected. Like many others, I was rooting for a weak labor report in hopes of lower rates, which usually means higher stock prices. Unfortunately, we got something so weak, I didn't want that it feels like even lower rates won't resuscitate things, which is why the Dow went up initially. But then when people looked at the numbers, they realized they weren't so good, and it lost 220 points. S&P shed 0.32%, and the Nasdaq declined 0.03%. And that's what happened today when we discovered that this gigantic economy is simply not creating jobs in any meaningful quantity. And the Fed may not be able to stem the tide with just a quarter-point cut, which is what's expected. If that's true, then corporate earnings may be coming down, and credit, which has been robust, might get tighter, leading to rising defaults, hence why the banks led the entire market lower today. Sell, sell, sell. Now, before I talk about what's coming next week, let me put in a little ray of sunshine in the equation. I still think bad news is only going to be good news because unemployment isn't really spiking. We have lackadaisical job growth, and rate cuts will stimulate the weakest part of business, which is housing. I always say that housing punches above its weight in the economy. Because when you build a house, a lot of things happen beyond hammers, nails, and wood. The process of buying a home entails endless different kinds of transactions of the financial retail variety. Home sales, by the way, are currently at a more than 40-year low. Conversely, $1 billion, say, of dollars being spent on building data centers. They can be erected, but that puts some people to work. But once they're up, I'll tell you, it only takes a handful to run them. I've been in one. Sure, you'll use a lot of chips from NVIDIA and Broadcom, what a stock, and tons of metal racks and concrete, some cooling equipment, plumbing, but beyond that, not much at all. Homes, on the other hand, allow all sorts of companies and all sorts of people, skilled and unskilled, to be put to work. After all, artificial intelligence still can't hammer a nail or hang a roof. So I'm not going to be a doomsayer here. I will say, though, that lots of stocks have moved up a great deal, and sometimes we forget that we are indeed in the month of September, when money managers look for any excuse they can to ring the register. With that in mind, let's take a look at what's on tap for next week. Okay, we're going to start Monday with one of the best retail concepts around, and you may not know it, but I want you to learn about it. It's called Casey's General Stores. This company has 2,900 convenience stores in 20 states and a breakfast pizza that's more than just a gimmick. We love these guys. Now, we can make a ton of money owning an outfit like Casey's that dominates in the smaller towns that it operates in. You know, we had Casey's on back in June, and I was stunned at how loved their stores were. And I tell you, I was stunned about how much I like the breakfast pizza. And we were thrilled to hear that the regional going international story is alive and well. They report after the close. I'd be willing to buy some both before the earnings and after. It's just the kind of out-of-the-way story that could work in this tape. Not worried about tariffs here. Tuesday, Oracle reports, and for the longest time, Oracle could do nothing right as a software company. But ever since it reinvented itself, or more accurately, ever since Larry Ellison and Safra Catz turned the place into a data center kingpin, it's been doing nothing but net. You saw some of that excitement today when Oracle stock jumped more than $9 on news of a further expansion in their data center strategy. Remember, right now the market's turned fickle, so it's entirely possible that a good set of numbers will spur profit-taking in Oracle's smoking hot stock, unless the results are truly incredible, like the aforementioned Broadcom, which delivered amazing numbers last night. It may not be enough to move the needle. Now, here's something that could move the needle, though. Apple. Yes, Apple's rolling out the iPhone 17 line of products, and I like what I'm hearing, which is crickets. Yes, it's supposed to be what's called an awe-dropping event, but like so many things that Apple does these days, nobody on Wall Street seems to care. Good things the rest of the world does feel differently and does care. Apple remains a maligned company with the best pure product set in history. And as long as that's the dichotomy, well, you probably know exactly what I'm going to say. Own it, don't trade it. Here's one worth watching, drone maker AeroVironment, which reports Tuesday after the close. We had them on when they reported last, okay? And I love what I heard, but I felt like I was alone. The stock was doing nothing, even when it dipped. Then, oddly, when I talked it up on Squawk on the Street, the darn thing levitated, and it never came back down. I said right here, and you can see. Nice move, huh? The defense budget is rapidly evolving. We recognize that drones are a more efficient way to make war than other, let's say, than how about $100 million fighter planes? Again, like Oracle, a good number could be met with profit-taking, but I'm mindful that AeroVironment's got a terrific story to tell. You know what doesn't? GameStop. Its chief claim to fame is its surly chairman and CEO, Ryan Cohen. Maybe he has something to say. Maybe his acolytes and minions will care. Or maybe GameStop will once again find a new way to disappoint. If this market's going to shrug off today's bad is bad rubric, we'll have to see some good news on the inflation front, something that would allow the Fed to cut interest rates more aggressively than we think they're going to cut right now. I don't know if that's possible given the fluid tariff situation, but we will know when we get the producer price index on Wednesday morning and the consumer price index on Thursday. Tame numbers could reset the narrative. But again, I caution that there's nothing bullish that really happens throughout much of September, just sporadic moments. On Thursday, we hear from Kroger, the supermarket giant, and it's a much like story, in part because it's been able to hold prices down for the consumer. I'm more keen on Costco and Walmart, as you probably know, but Kroger's been known to rally on good numbers, and I think he can deliver again this time around. However, I am not sure about the stock of a one-time fave of mine, Adobe, which has fallen dramatically out of favor, not unlike Salesforce, which reported a big upside earnings surprise this week. But it meant nothing for the stock, ostensibly because it didn't lift guidance enough, but more likely because the Wall Street fashion show has turned against their software-as-a-service business model, like Adobe has. Why? Because money managers are under the impression that this kind of model is vulnerable to artificial intelligence competition. Lost in the shuffle, Adobe's got the best product. I no longer think that may be enough to propel the stock higher. Come Friday, well, this is what typically happens. We're most likely to have to get back into the habit of expecting tariff news, perhaps the long-awaited semiconductor import duties. It's been hanging over us. Maybe we'll get deets. The sooner we're finished with the tariffs, the better, but perhaps the only decision nullifying most presidential tariff forays by the Supreme Court will ever let that happen. The bottom line, as we head into the next week, keep in mind that we're stuck in the month of September, a historically terrible month for the market where bad news is bad news and good news is fleeting. It's not the end of the world, people, but it is an awful stretch of the calendar. Can we go to Leslie in California, please? Leslie.
Jim, club member.
Oh, fantastic.
Easy question for you, Jim. Northrop Grumman, buy, sell, or hold?
I'm going to say weak hold. I don't like the traditional hardware defense stocks, particularly if they're up a lot, which happens to be the case of Northrop Grumman. So I'm a little profit taking there. It's a little market above the market multiple. Let's go to Ty in Arizona, please. Ty.
Hey, Professor. Booyah.
Booyah, right back. Thank you for giving me tenure. How can I help?
I'm a little bit worried about this company. I've owned them for a long time. They aren't growing, in my opinion, at the right rate. They're not doing much. I just don't see the leadership behind this, in my opinion, doofus Steve Squeary. What do you think about American Express?
Oh, my God. I think I'm going to have to – I don't like to come out against our viewers, but I'm going to have to be 100% against you on this. I think Steve Squeary is a remarkable executive, and I am hard-pressed to criticize a company that hit an all-time high on this very day. So I'm saying – buy. All right, going into next week, remember where we are at this point in the calendar. September is historically a bad month for the market. And while it's not the end of the world, it's usually a real tough stretch for stocks. Kind of keep that in mind. Oh, man, money. Football season kicked off last night with my beloved Eagles beating the Cowboys, and every year we like to start the season with a fantasy football stock draft of our own. I'm sharing the players and the stocks that I'm picking. I'm a little longer on the players than the stocks tonight. Okay, then Reddit and Robinhood just joined. Hey, Robinhood, by the way, just joined the S&P 500. Have been hotly debated on Wall Street, but how is the consumer feeling about those two names? I'm getting the latest from the data company 100X. And Lululemon got crushed today after earnings, and I think that was really a sign that could have been predicted. Well, I'll reveal what it was. Stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.